Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Stocks from the technology and specialty retail sectors. That's what we're going to hear about today with our strategists, Ben Rains, who joins me here at the desk, and Dave Bartosiak out on the Skype thing. I'm going to start with you, though, Ben, because you had your rain boots on today, so I wanted to be sure that you give you special treatment for that. So Lululemon is what you're talking about.
Correct. And Lululemon's been one of the hottest retail stocks, maybe one of the hottest stocks on Wall Street for the last 2 years. The stock's up 245% in the last 2 years and 45% in 2019. It's coming off a really strong Q4 of 2018. It beat earnings and revenue. Revenue was up 26%. Comps were up 17%, and e-commerce comps were up 39%. So some real big growth on the e-commerce side, which is good because they've never been a wholesale business. They're like basically only a direct-to-consumer retailer, and e-commerce is now accounting for 30% of their overall business. So that's really strong in this Amazon age where everyone's just trying to push into direct-to-consumer. That's Nike, Adidas, all of those companies. And Under Armour has kind of failed in that business where they're trying to slowly grow that direct consumer. So Lululemon is there already.
But their product is in a niche, right?
Yeah, for sure.
So that's where they carve their
market. Yeah, they really helped sort of kick off this athleisure wave that Nike and Adidas and all of these other companies have been trying to copycat, which they've done to some success. But Lululemon's footprint in terms of actual retail is mostly in the U.S., Canada, Australia, but they're trying to grow in Europe. In Asia, they see China as maybe that next big growth market for them. And as we mentioned, they popularized this yoga athleisure trend for women.
Yep.
But going forward, they've really expanded. They've expanded into outerwear, so they're trying to take on Canada Goose with that really high-end outerwear jackets in the multiple hundreds of dollars price range. They have shoes now. They're also expanding into self-care, so deodorant, moisturizers, all of that. They have a subscription business that they've been testing out, so you pay $100-something and you get perks throughout the year. That's really that customer loyalty factor. And then one thing that they're really talking about and management's really focused on is their menswear business. So that's growing more quickly than they expected. And they're really doing everything they're doing for women, they're also doing for men. So they're doing men's outerwear, men's athleisure wear, men's footwear. And they even recently signed quarterback Nick Foles, who's won Super Bowl for the Eagles a couple years ago, and he's their first ever official menswear ambassador. So they're trying to grab with that Nick Foles sponsorship, maybe some customers who are loyal to Nike or Adidas or Under Armour who might not even at this point know about Lululemon, since it's more of a millennial-focused women's brand at this point. But they really see their men's business as growing big. I see maybe, this is something I've speculated, they could easily kind of transition into golf. They already sell polos and those kind of more outdoory pants that are crossover between work and more athletic wear. So really big menswear business growing. And then if we look at the chart here, long-term for earnings growth, you'll really see where Lululemon's strength looks like it could continue in 2019 and 2020. So we see that their 2018 estimates slowly went up, followed by the stock pricing kind of following as suit, like going up really big. Obviously, it fell down at the end of 2018, as most companies and stocks did to end the year. Bounced back up in a big way to start the year. We see the huge rise in earnings estimates going upwards. And then if you look at the revisions for fiscal 2018, or fiscal 2019 and 2020, they're going up in a big way. So that's really the positivities we're seeing here on our Zacks side. So Lululemon looks strong going forward.
Yeah, strong momentum going forward.
Yeah.
All right. Well, Dave, at least now you know where to go get moisturizer if you need it.
You know, I have been drying out a little bit over the last few days, so that's good to know.
All right, you're going to talk about Cadence Design Systems.
That's right. While this may not be as exciting to talk about as Lululemon, when you take a look at the chart here, you're going to see why I like it. Zacks ranked number one, strong buy. Coming off a pretty good earnings report and have them in surprise trader. We've definitely benefited from that. They're in basically the internet software industry is how we've got them labeled, which is the top 9% of our Zacks industry rank. And really what they do is cloud-based software for the manufacturing business. So it's cool. It's a neat little combination of a tech stock and something that's benefiting from a boom in the manufacturing business. So you get that kind of crossover, which I like. But the real reason why I like the stock so much is its price consensus and EPS surprise chart that we have on Zacks.com. So let me go ahead and share my screen here, get that pulled up with you, get that pulled up for us. And as always, the black line here corresponds to the right y-axis, which is price. The little green arrows are quarters where they beat earnings. The little red arrows don't exist because these guys are consistently beating their earnings estimates. These multicolored lines represent the evolution of our Zacks consensus estimates over time. And now, so let's see what's happened here. You've got really consistent earnings growth throughout 2016, 2017, but it really took off in 2018. And you saw estimates for fiscal year 2018 tick up consistently while the stock was really chopping around sideways, right? So we've got this range throughout 2018 where the stock really couldn't make a move, couldn't break out, was sort of pushed under this maybe $47 level, found some support just north of 35. Really was kind of, just wandering through the desert, not really sure what it was going to do. Then all of a sudden, like a rocket ship, this thing took off to start this year and has really been on a tear, going from the low 40s up over 65, close to $70 now. At first glance, that might seem like a stock that's overbought, a little too hot to handle. But you know what I love to say, Terry? There's no momentum like momentum.
Yeah.
And this stock has it in droves, not just on the price, but also these earnings estimates. So while some investors may look at this and be nervous because, wow, the stock has just come so far, look at 2019. So here we could use this left y-axis to give us some perspective. So back in 2018, when this stock was chopping around, analysts were basically expecting, $1.70 per share out of the stock for this year, for 2019. Now you're looking over $2 per share, $2.10, and that has been creeping up on multiple occasions. So you've got everything here. You've got the growth, which is represented by the distance between these lines, and then you have that's the year-over-year growth rather, and now you just have this aggressive rise in earnings estimates, and that's a big reason why the stock has done so well here over the course of this year, and I think it's positioned well to keep on running throughout the rest of the year.
So, Dave, do you own either of these stocks?
I have this in Surprise Trader.
Okay. And Ben, what about you?
I do not own either, no.
Okay. Thank you both for that, gentlemen. Don't forget, always more stock information on our website, Zacks.com. Get over to the homepage and start checking it out. With Ben and Dave, I'm Terry Ruffalo.